I'm in Zerodha Kite. I'm going to start off with the Heiken Ashi method. So what we will do is we will look at how we do things step by step in Heiken Ashi. The first step we do is mark the opening price on our chart with a horizontal line. Right? The price opened here. The rule is like if your price action is trading below the open price, you will look for a PE entry. I'm talking here about options only. Please don't tell me that we need to know about stocks also. At this moment, I will talk only about option trading and option buying in particular. So what do? We in a Heiken Ashi method, we have some small rules which we follow. Let me also take some. Sorry. I'll take it for the next expiry so that we are all clear about what we are talking about. Here I made a mistake. देखेंगे क्या होता है. We are going to have two charts side by side for our trading. And first step we do is we look at the Bank Nifty's trend. The trend in the sense if the price is below the open, then we say it is a downward movement, downward bias. So we will look for PE entries. If Bank Nifty is trading above the open, we are looking for entry into CE. Now in Heiken Ashi method, what we do is we have a Heiken Ashi chart put on our display, all in 15-minute time frame. Whenever we have a green candle forming in Heiken Ashi, we do nothing. Because we have two simple rules in Heiken Ashi. One is never buy against a green candle. And when you see a red candle, don't think of selling. You only think of buying. This will be applicable for all your CEP, everything. So when the day starts, it starts with a green candle. We don't do anything, we wait. We wait for a red Heiken Ashi candle to form. And as it starts forming, we look for our entries where the price will break the high of the previous candle in the normal chart. So as we go down, I have a Heiken Ashi candle here forming continuously. And I will look for a buy entry as soon as the high of the previous candle is broken. So I get a fake entry here. Sorry. The high of this candle was broken by the next candle and then it fell back and hit your stop loss. Now we are talking here about a stop loss of 12 rupees against the entry price of 85 rupees 20 paisa or 85.5 or whatever. So this is one of the drawbacks I was mentioning about Heiken Ashi. It tends to get you into a trade at some wrong prices. Now initially we said we will avoid these wrong entries by only taking entry at near a support level. So this was obviously not a right level to enter because there was the immediate resistance overhead. We could not have taken that entry. So you wait, keep on moving your entry level to the next candle high. So here again, it was not near support level, though it did come close. It was trying to move upward. Ideally, we would have waited for it to come to support and then taken a trade. This is more or less in line with our price action trading in the normal method, where you buy at support and sell at resistance. So what we do is we use Heiken Ashi as a kind of timing tool rather than any entry signal. So my Heiken Ashi tells me that this price has finally come near support. So I should be ready to take a trade if the high of this normal candle is broken. So the normal candle in this case was this one. Sorry. $11.15 candle and 11.15 candle ka high has to be broken, which is this green candle. So you decide I will enter at a high price of 59.2, you can say 60 rupees. And your stop loss would have been 50 rupees, which is 10-point stop loss. After entering the trade, you would have happily taken your profit as it reaches much higher levels. It crosses resistance, then stalls there for some time. This is where you have a lot of psychology issues happening. People tend to exit early by saying, okay, it has reached resistance, I should exit. Or you could wait for a proper signal to be formed and then you could have exited. Now, if you look at the Heiken Ashi candle here, there was only one red candle which formed. And this doji candle tends to signify that there is indecision even in a Heiken Ashi candle. So assuming that you are in the trade, you might have taken a smaller profit if you had entered at, let's say, about 60 rupees. You would have made 30 rupees profit, which is good enough, no problem. But I try to look at what the price is doing. If it is not able to give a sustained downward momentum, then I would prefer to wait. And normally I don't keep this pivot lines. I have my own support and resistance lines drawn. I draw my support and resistance based on the 1 hour candle. And I change over to a line chart. Then I start marking my levels. Wherever there is a clear turning point, let me just draw this also as an example again. Wherever price has turned sharply from any place, you will mark those levels. After this level was crossed, actually there was only a sharp turn at around this place. So you had no reason to exit at 90 rupees or whatever. Right. And you should have held on to the trade at least around 300 rupees stuck, you should have waited. So if you go back to your 15-minute candle, you would have found that you have just crossed one resistance and moved on to the next level. Ideally, I could have marked a lot more lines, but I'm just giving it as an example. So Heiken Ashi, we don't have a clear system of exit. I said exit at your comfort. Okay, if you exit at even 100 rupees after having bought it at 60 rupees, it's fine with me. It's your money, your capital. You need to determine what is your return. I tend to hold a trade. Now, because of all these conflicting signals you get in a lower time frame, I normally look at a 1 hour time frame to see if those signals are valid. If the signals are not valid, I hold the trade. Now, even this 1 hour candle, some people are finding it difficult. We said, let us now look only at the daily candle. Not on the option chart, of course. I tend to look at it on the Bank Nifty spot chart. From a downward move, it moves upward. I would have taken a buy entry and 33,500 CE is what I've taken. And this would have given me a fairly decent profit because I entered quite at the bottom. By far, Heiken Ashi method is the best ever method you can find, provided you can overcome these drawbacks. So when I find that I have a price moving up and down, I start looking at the daily candle and seeing what the price is doing here. So if the daily candle does not threaten my trend, I continue with my trade. When you were at the bottom and you started going up, right, you would find that there's a long wick here. This long wick itself tells me that today is going to be a losing day for me. And I don't want to do anything to prevent it. So Heiken Ashi method, you get the lowest possible entry. After that, it is up to you to decide where to exit.